Corporate Finance Excel Practice Problem. In this presentation, we will work a practice problem in Excel related to projected units to be produced. Get ready, it's time to take your chance with Corporate Finance. Here we are in Excel. We have our information on the left. We're going to put that information into the blue area into our worksheet on the right, calculating units to be produced. So when we're thinking about projections into the future, we typically have to start with the amount of sales we're going to have and then the units that we're going to produce in order to do our projections in a logical fashion. Also note that we're going to have 3 tabs here, or 3 different problems. You may have 6 tabs, one with the answer, one with the problem, but we're going to be working through 3 different problems that are going to be similar in nature as we go through the practice problem here. Information on the left. Estimated units to be sold next month. So this is how many units we expect to sell. And then the percent of unit sales maintained in ending inventory each month. So we're going to have to account for that, the cushion that we want to have in our inventory at any given time. Beginning inventory in units. This is what we have already in inventory. How many units should be produced in the coming month? So when we're thinking about how many units we need to produce, remember, that if this is a continuing process, in other words, we had units in there last month, we probably have some units in beginning inventory already that we'll have to account for. We're going to have to think about how many units we're going to sell. That's going to be an estimate, so we want to make sure that we have a cushion involved to some degree in case sales are higher than that amount, so that we have enough inventory in order to cover it. Therefore, we're going to shoot for and look for an ending inventory number that we expect to have on hand as well. Notice that inventory number, how much we keep on hand, is always kind of something that we would like to, there's debates as to how much you should have on hand at any given time, right? If we can lower that number, we're going to be more efficient in our processing, but it can lead to problems. So if we can have like a just-in-time system and have very little in terms of actual inventory, then that can be good in some systems. If we cannot do that, we need to have the cushion of inventory, then we want to figure how much inventory we might need in case sales are high, so that we can cover them. So we have the projected sales. We're going to say, all right, let's start this out. We're going to say we got projected sales. We're trying to think about how many units we need to produce next month. We're going to say, well, I know that we're going to sell 65,000 units. So obviously we need 65,000 units on hand at least, if those are the units that we expect to sell. Now, the desired ending inventory, how much we hope to have an ending inventory, because we might say, hey, I might sell more than that. So I want to have a cushion of some kind, not just 65,000, exactly what I believe I'm going to sell. We're going to take that 65,000 and say that we want a percentage of sales maintained in the ending inventory. So I would like to have 15% of whatever I think I'm going to sell that's still in ending inventory in case sales are higher than projected, so that I have enough to cover. So that I'm going to take, this is going to be equal to the 65,000 times, we got to do this way. I'm going to say brackets, times the 15%. So that's going to be the 9,750. The 9,750, that's what we want to keep in ending inventory. So that means the units that we're going to need, the units that we need to have, will be the sum of those two equals the sum of, I'm hitting the up arrow once, holding down shift, up arrow again, and enter. Let's put an underline here for formatting, home tab, font group, underline. That means that we're going to need 74,750 units. Now, we already have some units on hand, however, in the beginning inventory from like the inventory that was left over from last month. So we have those actually physically on hand. We're not guessing here because we can go count those. So we have 20,000 that's on hand. So I'm going to say, all right, 20,000. We don't need to make those 20,000 in order to get to the number we need, 74,750, because those are already in beginning inventory. So if we subtract this out, then we're going to say, and I'm going to sum this up to subtract it out because I put this in here as a negative number. So it's going to be a 74,750 minus the 20,000, or equals the sum of the 20 and the 74,750, giving us the 54,750. Let's do some formatting. Let's put an underline here, home tab, font group, underline. Let's put a double underline here, home tab, font group, drop down, double underline. So that's how many units that we believe that we need to produce in order to, if you back this out, right, in order to cover the sales that we expect to have, the projected sales that we have, and the desired ending inventory that we hope to still have on hand if we sell the 65,000. You know, I mean, if we sell more than that and we don't have the ending inventory, that's fine because sales are higher. You know, that's why we have the cushion in the first place. But if we sell the 65,000, we want to have that ending inventory cushion. All right, let's do this again, or a similar problem. Go into the practice problem 2 tab. So similar kind of problem, not exactly the same, but similar process where we will be calculating the units to be produced. So we have, this time we're going to have, starting with the month 1 unit sales. So this is the month that has passed. We're going to say here 30,000 sales. And then the percent increase expected next month, which we're projecting into the future. That's going to be a typical projection. We start with what happened last month in this case, and then we project what's going to happen into the future based on that information and what we know about the economy and the business and so on and so forth. So then we have the percent of sales desired in ending inventory. The beginning inventory units are 1,500. So how many units do we need to produce? And this is going to be the typical information we're going to have, right? We know last year's sales number, and we can predict that. So then we're going to make a prediction of how many sales units we're going to have this time period. We're then going to have our set amount that we want in ending inventory in some way, shape, or form, either a set number or some type of percentage of sales or percentage of ending inventory, beginning inventory, something like that. And we're already going to know what's in beginning inventory because that was what was in ending inventory as of the prior period, as of the prior month. So we're going to start with the projected unit sales. Projected unit sales. Now we have this business of an increase of 45%. So remember, that's just like calculating like a tip. If you went out to dinner and you're going to give a 45% increase or tip, which is kind of high, they must have had good service. But it would, you know, let's do this way. And then I want to do this with a formula in Excel. I want to practice using formulas, not just hard-coded numbers. So I'm going to make this then a percent. We're then going to multiply this out. This is going to be the 30,000 times the 45%. Then we would have to add the original amount, the original bill, right? And then plus the tip or the increase. 43,500. If I do this in one step, we could say 145% or 100% plus 45, which would be 1 plus the 45%. If I make that a percent, then we have the 145. So we can step right down here to the 30,000 times the 145%, giving us that same number. How can we do that with a formula then? We can say, okay, this is going to be equal to the 30,000 times, we need brackets, which is going to be brackets 1 plus the 45% close brackets. You need to have the brackets because we want to do the addition but before the multiplication. And this way we can set up our information on the left-hand side and we can change the information on the left-hand side without hard coding anything on the right. And that's how projections work. You really want to practice that because, you know, that's how things work in practice. In a test question, obviously, you'll have one answer, but in real life, you're going to be projecting and making estimates. So you want everything kind of connected out and practice putting your worksheets together in such a format to do so. So then we have the desired ending inventory. Desired ending inventory is going to be 10% of the sales. So we're just going to say, all right, we'll just pick up the sales then of the 43.5 times that 10%. That's what we want to have in ending inventory, but I put it, I'm going to move this up. Hold on a second. I put it down there for some reason. Let's do this again. I'm going to do it again. Sorry about that. And there we have that. All right. And then that's going to give us the units required, the units that we're going to need. And this isn't taking into account the ones we already have, but we're going to need then the sum of these two. I'm going to put an underline here, Home tab font group. Let's put an underline there. And then we already have some on hand that are in the beginning inventory because that's what was left over from last month. So those were the 1,500. I'm going to put them in here as a negative number by saying negative of the 1,500. And then I'm going to subtract them by using the sum function in Excel because one's a negative number. So I can just use the trusty sum function equals the SUM, Shift 9, up arrow once, holding down Shift up again, and enter. And then I'm going to say the units produced are going to be that we need to produce are going to be this 46,350. So we need to make that amount of units because we already have these on hand in order to cover the sales that we believe are going to be the 43,500 plus the ending inventory, which we would like to have 4,350 left over. Or, you know, we would like the sales to be up and we can sell all those and that would be great. But we want to have that cushion in case sales are higher than projected. So we're going to go to the home. Let's put some formatting here. Home tab, font group, and underline. Let's put a double underline on this one. Home tab, font group, drop down, double underline. So now let's do this one more time. Practice 3 set. The practice 3 set. This looks very familiar. This will be the same kind of process. We want to get good at this and just kind of memorize this equation because it's standard and very useful equation. So we have the beginning inventory once again, or the beginning inventory at the 22,000. The projected unit sales are going to be 64,000. Desired to reduce ending inventory to % of beginning inventory. So notice we got the same information, but we're doing it in a bit different format. You know, you're taking, how are you calculating the desired ending inventory, right? You could take it as a percentage of the sales or a percentage of the beginning inventory. You can have it as a fixed number. That really depends on management on how you want to set up that cushion that you might need. So these are just some common ways that you can do that. They're all estimates, so there is no standardized way. And again, if you've worked with financial accounting, then when you do these kind of things and projections into the future, sometimes people get frustrated. They're like, well, what's the way that you're supposed to do it? Tell me the rule. Well, there is no generally accepted accounting principle for projecting, into the print. You can do whatever you think is best for your business, and there's going to be certain conventions that we can use that would typically you would think of being best simply because of logical reasoning. In other words, generally accepted accounting principles or some kind of format, sometimes of standard format, is not going to be put in place to do these types of calculations. So they're a little bit more fluid and that can be frustrating sometimes to people that are moving from like financial accounting to projections and managerial accounting. So it is what it is. So here we go. We're going to go. They got the projected unit sales up top. Projected unit sales we think are going to be the 64,000. And then we got the desired ending inventory. We want to have that cushion on the ending inventory. This time, not taking a percentage of the sales, but we're going to take a percentage of the beginning inventory. So this is what was left last time. And we're basically saying, hey, that was too high. We want to just take 25% of the beginning inventory. So we're basically, trying to cut down how much we have in inventory. You can imagine the decision-making process going here. Like, why do we have holding on to all this inventory? Let's knock that down to 25% of the beginning inventory, and maybe we'll push forward from there and take a percentage of sales in the future, but we need to kick this thing down at this point. So maybe that's, that could be the logic. But in any case, we'll take the 22,000 times 25% of it, desired to reduce ending inventory 2% of beginning inventory 25. Okay. And then we'll underline this, home tab font. Let's underline this. This is going to be the units that are required that we need to have, although we already have some in the beginning, so we don't need to produce all these. This equals the sum of these two. And then we have the beginning inventory, which we thought was too high. We have a lot of beginning inventory left over from last month's operation, that being the 22,000. And so let's make that a negative. So I'll say negative of the 22,000. And then we're going to subtract that out, and that'll give us the units to be produced, the units we're going to make this time. And so I'm going to do that with the sum function because this second item is a negative. So the 69.5 minus the 22,000 can be done with simply the equals sum formula, summing up those two numbers. Let's format this. We're going to put an underline under the 22 by going to the home tab font group and underline, double underline under the 47.5 home tab font group, drop down, D double underline. So we need to make 47,500 units in order to cover the amount we're going to sell, 65,000 plus the desired ending inventory 5,500, given the fact that we already have 22,000 in the beginning inventory.